Welcome to Cold Brew Finance's U.S. End of Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the week ending Friday, June 13th, 2025. Kicking things off, I'm Max Profit. Key indexes closed lower this week. The S&P 500 index ended at 5,977.48, down 22.89, while maintaining a strong positive trend. The Dow 30 index fell more notably, losing 565.10 to 42,197.78. The Nasdaq Composite closed at 19,406.83, down 123.12. Market breadth was predominantly negative this week. The Nasdaq Composite showed the weakest breadth with 1,696 declines versus 1,354 advances. The S&P 400 mid-cap saw nearly twice as many decliners as advancers, with 250 stocks down versus 142 up. In weekly returns, the Russell 2000 showed the largest decline at minus 1.58%, while the S&P 500 was the most resilient, down just 0.38%. Month to date, however, the Nasdaq leads with a 1.53% gain. Looking at long-term performance, the Nasdaq Composite leads with a 10-year annual return rate of 14.4%. The S&P 500 follows at 11.1%, while the Russell 2000 trails with a 5.2% annual rate over the same period.
Checking out best and worst performing equities, I'm Penny Stock. Leading the pack, Klotho Neurosciences soared 680% to 1.60, hitting a new all-time high with strong upward momentum. Healthcare Triangle and Crown Electrokinetics followed with gains of 212% and 154% respectively. Weekly returns show Klotho Neurosciences leading with a 680% gain and 157% average daily return. Healthcare Triangle posted 212% weekly returns with 46% daily average. Year to date, most stocks show negative returns, except Klotho with 229% gains. Long-term performance data is limited for most stocks in this group. Healthcare Triangle shows significant decline over 3 years with minus 86.8% annual rate of return. Crown Electrokinetics and Omihome lack sufficient historical data for meaningful long-term analysis. Among large caps, Oracle led with a 23.6% gain to 215.22, achieving a new all-time high. Energy stocks dominated with APA, Halliburton, and ConocoPhillips, all posting double-digit gains amid strong upward volatility. Weekly performance shows Oracle leading with 23.7% returns and 4.5% average daily gains. APA and Halliburton followed with weekly returns of 13.6% and 13% respectively. Month to date, Oracle maintains leadership with 30% gains. Long-term returns highlight Oracle's strength with 385% 10-year total return and 17.1% annual rate. Enphase Energy shows similar 10-year performance at 398% total return, despite recent negative trends. Leading declines, SharpLink Gaming dropped 77.7% to 9.21. Mullen Automotive fell 68.7% to 2, marking its 21st consecutive weekly decline. Wang and Lee slumped 66.8% amid strong downward volatility. Weekly performance shows steep declines with SharpLink Gaming falling 77.8% and Mullen Automotive down 68.8%. Month-to-date losses are significant, led by SharpLink at minus 88% and Mullen at minus 75.6%. Among the worst performers, SharpLink Gaming plummeted 77.7% to 9.21. Mullen Automotive dropped 68.7% to 2, marking its 21st consecutive down week. Wang and Lee and Senmiao Technology both fell over 66%, while Juzi declined 63.7%. In large-cap declines, JM Smucker fell 13.6% to 95.72, hitting a new yearly low during its fourth straight down week. PG&E dropped 12.7%, while United Airlines declined 12.1%. Edison International and Lululemon Athletica rounded out the top decliners. Weekly declines showed JM Smucker leading losses at minus 13.7%, followed by PG&E at minus 12.8%. United Airlines fell 12.1%, while Edison International dropped 10.1%. Lululemon experienced the largest year-to-date decline at minus 37.5%. Looking at longer-term performance, PG&E shows a 10-year decline of 72.9%. Edison International and JM Smucker both recorded negative 10-year returns. Despite recent weakness, Lululemon maintains a positive 10-year return of 259.7%.
And now on to U.S. sector performance, where energy leads with a 5.7% gain, closing at 669.1, showing strong upward volatility. Healthcare rose for a third consecutive week, while utilities displayed a very strong positive trend. Technology maintained its very strong positive trend despite a slight decline. Market breadth analysis shows energy with strong internal momentum, as advances outnumber declines by nearly 4-1. Healthcare shows mixed signals with daily advances leading, but weekly declines dominating. Consumer cyclicals and technology both face broader selling pressure with declines outpacing advances. Short-term returns highlight energy's strength with a 5.7% weekly return, an impressive 8% month-to-date gain. Healthcare shows modest improvement with a 2.5% monthly return, while technology maintains positive momentum despite this week's slight decline. Looking at longer-term performance, technology stands out with a remarkable 10-year annual rate of return of 20.7%. Consumer cyclicals show strong 3-year returns at 16.7% annually, while utilities maintain steady growth with a 6.7% 10-year annual return.
Energy stocks showed significant strength this week. APA and Halliburton led with gains exceeding 13%. ConocoPhillips, Diamondback Energy, and EOG Resources followed with increases near 10%. Strong upward volatility characterized most moves, with multiple stocks showing consecutive weekly gains. Month-to-date returns have been particularly impressive. APA leads with a 23.5% gain, while Halliburton has risen 18.4%. Diamondback Energy and EOG Resources both show strong momentum, with gains exceeding 15% for the month. Looking at longer-term performance, Diamondback Energy shows the strongest 10-year returns at 92%. ConocoPhillips and EOG Resources follow with gains of 53% and 40% respectively. APA and Halliburton have faced more challenges over the decade.
Among underperforming sectors, financial services led declines, dropping 2.6% despite maintaining a very strong positive trend. Industrials fell 1.5%, but achieved a new all-time high last week. Consumer defensive declined for a second consecutive week. Market breadth reveals significant weakness in financial services, with declines outpacing advances by nearly 4-1. Industrials showed similar weakness with declining stocks leading by almost 2-1. Other sectors maintained more balanced advance decline ratios. Weekly returns highlight the pressure on financial services, down 2.6%, followed by industrials at minus 1.6%. Despite recent weakness, year-to-date returns remain positive across these sectors, with industrials leading at 7.9%. Long-term performance shows industrials leading with a 10-year annual return of 9.6%. Financial services follows at 9.4%, while basic materials trails with a 5.8% annual return over the same period.
Financial services stocks showed significant weakness this week. Marsh and McLennan Companies led the declines, falling 5.4% with a negative trend developing. Wells Fargo and Aon each dropped around 5%. Mastercard, despite recording a new all-time high earlier in the week, retreated 4.7%. Weekly returns highlight the sector's challenging period. Marsh and McLennan posted the largest weekly decline at minus 5.5%, with a concerning daily average return of minus 1.1%. Wells Fargo and Aon show similar negative patterns in their short-term metrics. Looking at longer-term performance, Mastercard stands out with an impressive 10-year total return of 499%. Marsh and McLennan and American Express both delivered strong decade-long returns of about 267%, while Wells Fargo notably underperformed with just 27%.
Thanks for watching. I'm Max Profit, along with my AI co-host, Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.